Hello guys, it's your boy Amphy here. So today I'm going to be showing you guys one of the easiest strategies to trade gold as a beginner. If you're new to trading and you don't have a strategy yet, or you have strategy and you don't know which one to focus on, or if you're trading this one today and you know tomorrow you see another one, you don't know because you're confused which one works better. I want you to stick to the end of this video because I'm going to show you a very simplest, easiest strategy you can use to trade gold as a beginner trader and as an SMC trader, or the strategy in which I trade. That's what SMC. So without wasting much of your time, guys, let's dive in. So now, before I begin, there are things I want you to take note of, right? There are certain things you need to take note of if you want to like trade this strategy. Things to what consider. Number one thing is what trending markets. You make sure what identify what's the trend of the market. Make sure the market is what either trending bullish or trending what trending bearish, right? So if how do you know? Let's say market is what higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? That's a bullish market. So you've identified the trend of the market, right? Market give you a high, gives you a low, gives you a high, gives you a low, gives you a high, gives you a low. Breaking what? Breaking structure to the upside, right? Breaking structure to the upside. Breaking structure to the upside. So this market has to be a trending market, either bullish or bearish market, right? The strategy does not work in a consolidating market. It works only in a trending market, right? So that's a bullish trend. Now in a bearish market, we have lower low, lower high, lower low, lower high, lower low, lower high, and then what lower low, right? Market trending downward, breaking structure to the downside, right? Breaking structure to the downside, giving you what low, high, low, and high, right? So this is a bearish market. So market we first the first thing I said, identify the trend of the market, either a bullish market or a bearish market. And the second thing is what directional bias. Directional bias can be the same thing as what if the market is what bullish, you focus on looking for what buying opportunities, and if the market is what trending bearish, you focus on looking for what for selling opportunities. That's basically directional bias. Just identify one direction for that particular day and focus on what and focus on looking for what setups in that direction. Avoid going against the trend of that market, because the reason why many beginners fail is because they try to go against the main trend of the market. They are trading against the trend, right? Or let the trend be your friend. Always go in line with what's in line with the trend, because the trend is your friend. And then the next thing is what the 15-minute time frame. Now, for this to work properly, you need what the strategy to work on the 15-minute time frame, right? So, and the last thing is a valid order block. And a valid order block. How do you identify a valid order block? For another block to be valid, there has to be what a break of structure, right? A break of structure, an imbalance, an imbalance, an imbalance, and then the other block itself. That's the other block, a break of structure, imbalance, and what and an other block itself. I'm going to show you all these things on the chart live. So guys, let's go to the live chart. But take note of all these things. You identify the trend of the market, directional bias, 15-minute time frame, a valid what other block, right? So let's go to a live chart. So you what identify the trend of the market. Now let's take this for example. We have markets giving us bearish structure, right? We have what lower low, lower high, market breaking what the structure here, right? So when there is a break of structure, you will look for the origin that gives rise to that break of structure. Alright. This one is one another bearish. This is a low here with break of structure here. Alright. So when there's a break of structure, look for what? An origin that gives rise to that break of structure. That's the other block or the extreme other block that give rise what to that break of structure. If there are several other blocks, choose the one close to liquidity. If you want to know more about liquidity, I made a video about liquidity. You can check my channel. Search liquidity under my channel. You will see what I mean by what liquidity. Basically, liquidity is what the first pullback after what after the break of structure. Now, this is a valid order block. Why? We have what break of structure, and we have imbalance. Imbalance is what is an impulsive move, right? And then what the other block itself, right? So what do you see here happen? This is what set your entry here. Your stop loss just below just below the invalidation. And what do you see? You get your what 1:3 RR. Then again you keep going, break of structure. You have a break of structure here. Then the origin that gives rise to that break of structure is this, right? What do you see happen? Set your entry, then stop loss above what? Above invalidation. Stop loss above invalidation. So if you want to know more about invalidation, I will make a video about invalidation. If just comment below if you want me to make a video about invalidation, comment invalidation below this video and I'll make a video about invalidation. So and what do you see? This one gives you also a 1:5 RR. Then that's how you keep going. Just identify the trend of the market. Look for a trending market. Now for example, this one we have a structure shift and then a break of structure. After that break of structure, the origin, that's the other block that gave rise to that break of structure. After this impulsive move, you mark it, set your entry, set your stop loss below the invalidation, and then target one high. That's what this one can give us 1:5 RR. And then you keep on like that, break of structure, the origin that gives rise to that break of structure. You just look for a trending market, but avoid this strategy when the market is not trendy. Avoid the strategy. Now let me recap. I said the first thing is what you identify a trend in the market, right? Is it bullish or bearish? Then the second thing, directional bias. Then choose a bias or direction for that day and stick to stick to that direction. Look for only trades in line with the direction. The next thing I said is 15-minute time frame. Identify that you're trending on the 15-minute time frame. And then the last thing is a valid order block. Identify your valid order block. And a valid order block is the order block that gave rise to a break of structure. So guys, if you learned something from this video, please don't forget to hit the subscribe button, like this video and share it with your fellow traders to help your fellow traders. Also, you can join my free Telegram channel where I drop my trade buyers analysis and tips with with the community. You can join. You can find the link in the description below. You can find the link in the description below. Also, you can check out my ebook, my smart money concepts ebook, which I wrote and I posted in my website. You can check it out. You can also find the link in the description of this video, guys. So guys, that's that for today. I'll see you in my next video. It's your boy Amphy. Thanks for watching.